Tesla stock recently moved higher for the second straight day. The company's shares were up 1.6%, bringing its two-day gain to about 7%. Tesla's been on a downward trend for quite a while, significantly plunging after the car company recorded lower than expected deliveries for the third quarter of the year, coupled with the seemingly disappointing Tesla AI Day. However, the company's stock is starting to recover as Tesla claims that it expects higher production value in the coming months. Hey guys, welcome back to Everything Tesla Stock. Tesla is no doubt one of the most valuable companies in the world right now. But just like major automotive companies globally, Tesla has had to face lingering supply chain risks, a slowing economy, rising competition, and falling order backlogs, all of which have at some point affected the company's financial figures and caused its stock price to drop heavily. Although Tesla seems to have no competition in the EV industry, there are fears as to whether the automaker has successfully pulled through the turbulent times, or if there are more episodes of a plunging stock price in the future. Is the worst really over for Tesla? Let's find out. But before we do, if you like this type of content, don't forget to like and subscribe for more information on everything going on with Tesla. Oh, and don't forget to turn on notifications. Tesla shares plunged after the company cut the price of some of its cars in China. They were down more than 1% at market close. The car company had slashed the price of its Model 3 and Model Y vehicles in China, one of the automaker's most critical markets. The recent price cuts may partly reverse some of the price hikes that the car company was forced to carry out earlier this year in China and the US because of rising raw material costs. Following the price cut, the starting price of the Model 3 sedan was reduced to $36,615, and the Model Y was down to $39,776. Judging by the reduction in the prices of Tesla's cars in China, one may believe that the car company is experiencing demand problems. These concerns are further heightened by the fact that the price cuts come in the face of rising competition for Tesla in China from domestic firms such as Warren Buffett-backed BYD, as well as upstarts NIO and Xpeng. However, it may not be sufficient to base a demand problem on a reduction in the prices of these cars. Other electric car makers have hiked their prices as rising raw material costs hit these companies. Likewise, the Chinese economy keeps facing challenges, especially with these strict COVID-19 controls that continue to weigh on retail sales. Therefore, if Tesla has progressed to a point of lowering car prices, it should signify a larger control over its finances rather than an issue with its demand. No doubt, the current recession has been hard on automakers, as many have struggled to keep up with car production and sales. Musk had also warned in March that Tesla is seeing significant inflation pressure in raw materials and logistics, and the price cuts seem to have come after Musk said he sees elements of a recession in China. There is no indication, however, that there is any cause for alarm. Tesla is actually expecting huge demand in sales in the fourth quarter of the year. The car company plans to push global production of its top-selling Y and 3 electric vehicles sharply higher in the fourth quarter, and build on that growth into next year as newer factories in Austin and Berlin ramp up production. Musk has stated that if Tesla's production forecast is achieved, then it will put the car maker on track to meet Elon Musk's goal of production in the coming quarter, and then put Tesla close to the scale of German luxury automaker BMW by the end of next year. Musk also stated that he sees a potential path for Tesla to be worth more than Apple and Saudi Aramco combined in the future, and he also added that this is the first time that he has seen this potential. Tesla is also ramping up production of its gigafactories, and its facilities in Texas and Berlin are achieving incredible milestones in car production. However, since these major fundamentals are not reflected in Tesla's stock price, and some analysis suggests that a share buyback might not be a good way to rise the company's stock prices, well, maybe it really could be. Musk has hinted that Tesla could repurchase up to $10 billion worth of its shares next year. Although Musk said that Tesla wants to work through the right process to do a buyback, he did confirm that it is certainly possible for Tesla to do a buyback on the order of $5 billion to $10 billion. With the newly imposed stock buyback tax, Tesla may be doing this a little earlier. The Inflation Reduction Act of 2022 recently imposed a 1% excise tax on share buybacks, beginning after December 31st, 2022. While it's not expected that the imposition of the stock buyback tax will reduce the volume of stock buyback transactions, the tax will primarily be viewed as an additional cost of execution. Since Tesla will have to spend more on share buybacks next year, the automaker may do the buyback earlier than expected. If Tesla can do a share buyback this year, then it would further add to the already bullish fourth quarter, and the rest would be a high share price for Tesla and increased profits for its investors. While many fear a recession, Tesla expects 50% growth year over year moving on. The car company has stated that it will grow deliveries at around a 50% rate compounded annually. Musk has also reiterated that Tesla will experience an amazing Q4 this year. Although many may say that there is a demand problem, looking at Tesla's deliveries in September, which were more than 2/3 of the deliveries of the quarter, Tesla will likely still have a final push at the end of Q4. While it could be said that Musk is saying this to try and pump up the company's stock, he may just be real and optimistic. Let's just say that Tesla got too big, and there weren't enough ways to transport all the cars in the third quarter. Although Musk didn't disclose how much he knew about this, he did say that Tesla is focusing on the high level and that the car company will grow at a 50% annual growth rate. It's also noteworthy that even though Musk anticipates a 50% growth as far into the future, as can be seen, this is probably a production target and not a deliveries target. And the reason is that Tesla is trying to smooth out deliveries and not have a rush at the end of each quarter. One thing is for certain though, Tesla's fundamentals haven't changed and the car company is still recording industry-leading figures, both in terms of sales and revenue, which is often what determines its survival in the long run. And it's also making progress with its 4680 battery cells. They gave an update on these new battery cells, and it also appears to be reducing dependence on the new cell. The 4680 battery cells are going to play a big role in Tesla's expected 50% growth rate, assuming that they can get it ramped up to full volume production. If Tesla is able to grow at 50% until 2030, then it would deliver up to 35 million units. This also largely depends on Tesla's next vehicle, probably becoming its compact robo-taxi, the Cybertruck, or the Roadster, which is also an eventual van as well. Likewise, if Tesla's FSD becomes widely adopted, then Tesla will have a very unique sample of manufacturing processes that can then be adopted on a larger scale. Tesla's got an ambitious goal to produce 2.1 million vehicles by 2023. While this is rather high considering that the company still has to conveniently survive the tough market conditions, it's not entirely unachievable given that Musk told investors last quarter that he was aiming to get Tesla up to 40,000 vehicles per week by the end of this year. By multiplying this, we get a figure just a little below 2.1 million. With a 2.1 million vehicle annual production rate, Tesla will be a bigger automaker than Audi and will be somewhere close to BMW, which produced 2.5 million vehicles last year. Tesla ramping it up to 500,000 or more vehicles in Q4 would represent at least a 35% sequential growth rate. Over the first 3 quarters of 2023, Tesla is aiming to produce 1.6 million vehicles, putting it on track to sell more than 2.1 million EVs over the next year. Do you think Tesla can reach that milestone? Let us know down below, and also let us know your valuation. And while you're still here, go ahead and click on this next video on your screen to see what Tesla's been up to over the last few days. See you there.